2, 1. Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to exit highly appreciated assets, defer millions of dollars of capital gains tax so you can preserve more wealth and then create more wealth at optimal timing. My name is Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He's out of the great state of Pennsylvania 49% of the time, and also now Florida 51% of the time. And he's the CEO and founder of Interchange Capital Partners. And using a collaborative and comprehensive process developed over 40 years of practice in the financial services industry, he has built a team that has a passion for what they do, that executes for each client's unique needs. He's a certified financial planner, and he's also a CFBA. Not quite sure what that is, but we'll talk about it. That being said, please welcome to the show with me, Ami Baum. Ami, how you doing?
Great, Brett. How are you? Thanks for having us.
Oh, absolutely. And a pleasure to have you here. And by the way, if you want to learn more about Ami Baum, you can go to interchangecp.com. That's interchangecp.com. So Ami, let's kick it off. Would you tell us a little bit more about your story and your current focus?
Sure. I started 42 years ago. Actually, it's now 43 years ago. I had not come from wealth. Matter of fact, the story is that I came home, got into college, and my father was very excited. And he said, "Great, how are you going to pay for it?" So that was the first clue that my father was a wonderful man in academia, really didn't know much about money and didn't really have a safety net. His famous line is, "What do you think, money grows on trees?" And yet I lived in a neighborhood, where it looked like there were money trees all around. So I ended up working my way through college. One of the restaurants that I ran, became friendly with his father was a stockbroker for E.F. Hutton. He told me, "I got you a job." I said, "That's great. What do they do?" And really didn't know much about it. So started smiling and dialing, cold calling, doing stockbrokering kind of things, recognized I really didn't like that. I found it to be, it worked for me, but it didn't work for the clients. And at the time, E.F. Hutton was pioneering in two things. One was professional money management, for pension, endowments, ultra high net worth, and then also financial planning. And I recognized then that there was another way of doing that. And then as the course of time went on, we started to work as our client's personal CFO, working in investment planning, retirement planning, estate planning. And then it became clear to us that the people that really needed and had the most complex situation were business owners. Not only did they have complexity, but they also recognized the value of advice and counsel. So we ended up specializing in family businesses. And fast forward, my oldest son in sophomore year of college turned to me in his apartment, says, "So what happens to Baum Consulting Group?" which was the name of our group inside of UBS at that time, said, "What happens?" I said, "Well, why do you ask?" He says, "Well, it looked like you've done pretty well for yourself. I might be interested." And so we started a plan to bring him in and help him build out the business transition group. So we had the Baum Consulting Group, we had the Business Transition Group. And then on my 65th birthday, we left and opened up Interchange Capital Partners, as an independent registered investment advisory. We're going to be celebrating our third year in June. And now we have recognized that family businesses have a lot of different areas. So we really work in four areas. First is in terms of business consulting and helping them grow and scale their businesses and turn them into self-managing companies.
Got it. That's fantastic. I mean, I'm going to keep moving here. That's amazing background. And it sounds like you guys have done a great job of focusing on helping people who are exiting, businesses and want family wealth legacy, want a solid team to work with when doing that to build their wealth. So let's dive right into the topic at hand, which is if you're not going to leave the business, it's not if you're going to leave the business, it's when. So Ami, what's the number one secret to helping people understand and start to create a vision for when they're exiting their business?
Yeah, I mean, I think you said it. Business owners tend to believe that it's not going to happen, and they're busy running their businesses. They're working in the business, and this requires a lot of expertise, a lot of time and energy, and frankly, for a lot of people, their business is their identity, and so they're really not looking out to do this. I'll get to it, or eventually, someone will knock on the door. So it's really the recognition that we know it's inevitable. We've seen the good, the bad, and the ugly around it, but business owners have a tendency not to focus on this for a variety of reasons around it. And then, as I said, sometimes they get fortunate and it works, but a lot of times it doesn't. So it's really a challenge because it's complicated. There's a lot of moving pieces. It requires a lot of different investment professionals and tax, legal.
Yeah, so there's a lot going on, and they tend to be in the business, working in the business. And not necessarily, they might be working on the business, designing it, but they're not actually working on the exit plan or potential exit plan, or strategically building the business in a way to exit in a great way. So, Ami, what's the number one way for business owners to make sure that they're planning in the future and not just being stuck in the business?
Yeah, I think the first step is they have to do some inventory. They've got to do a personal balance sheet, a business balance sheet. They have to figure out what it is that they're going to need so that they can cash flow their life. And we like to make sure that it cash flows until age 99, and then begin to see whether there's a gap for it. So that's one side. The issue around ownership is about future financial security, and a lot of business owners don't feel that they have that. The business is a lifestyle business and creates the lifestyle that they want for that. The other problem is they don't necessarily know who they can exit to or transition to. Most businesses transition internally, contrary to the notion of having some buyer walk in and take it off your hands. So the very first step is what we call clarity, getting clear on what it looks like 5 years from now, 10 years from now. When do you want to exit? How much do you need? What's the tax efficient way of doing it? So it's really a discovery process around getting clear on identifying and quantifying. And then once they get through that, then they can start working into how do they maximize and protect, because it does take time. The most successful exits and transitions happen over years and sometimes over decades for that.
Got it. All right. So it sounds like the key here is making sure you have like a cash flow analysis, not only on your business, but on your personal, not just analysis of today, but projections and where you want to be for your future. And it sounds like people get in the business and their lifestyle is great when they're maintaining this certain cash flow, right, continually. But if they stop working and they don't monetize that into another tax efficient way to continue to produce cash flow to keep their lifestyle, there can be in trouble. So you want to ID where you're at, and you want to quantify where you're at and where you want to be. Is that a fair summary so far, Ami?
Yeah, the first step is identify and quantify. And, then there's obviously a bunch of other issues that happen in that first step around psychological issues, identity. They are in control, and all of a sudden now they've got all this capital. And how am I going to be able to get the same kinds of returns? In many cases, the businesses are doing much better in terms of returns than what they can get in the public markets. And in other cases, frankly, their businesses are not doing as well. So there's a number of issues in that first step of identifying and quantifying.
Got it.
Financial.
Excellent. So once you get through that, what do you move to in the next step for the
next step is trying to identify who could you sell it to? Do you have In my case, I had a family member who was interested. In other cases, they don't exist. So do you have people in your management team? Do you have a strong enough management team to be able to do that with that? And then in that process, you have to be able to figure out, look at the business from a buyer's standpoint. A lot of times take a look at your customer concentration, take a look at your physical plant, take a look at ways that, you are, your people, your strategy, your execution, your cash flow. So all of that is
Good.
part of that.
All right. So identifying the who, whether it be internally, whether it be externally, and also just from a buyer's perspective, understanding what it is that you're selling, what it's worth, what the values are, what the predictable cash flows are. So that's secret number 2. What would be the next step, Ami?
The next step is to maximize and protect. So you've got to be able to make sure, this is a process. So you've got to be able to protect against contingencies, death, disability, intellectual capital theft. I mean, there's all kinds of due diligence process and things that you need to be able to look through and work on, making sure, as we said before, right people, that your secret sauce is in fact protected and it is a secret sauce around it, or making sure that the cash, and then continuing to grow it, and then figuring out from there, after you've got all that, what is the best transition and transaction pathway for it. And then to your point, given the nature of your show, what's the tax implication of all of this?
Yeah, this is a great transition to capital gains tax solutions and different strategies. So I'm curious, Ami, what would you say the biggest frustration when it comes to business owners that are exiting and wanting to either eliminate estate tax and or defer some capital gains tax that you've seen in your career?
Well, the biggest frustration is the government has made it more challenging over the years. It gets more and more difficult to be able, certainly from a capital gains and from a deduction standpoint. There are some things out there that can be utilized. The biggest problem in most cases that we've identified is that the existing team of advisors who got them here are not strong enough to be able to get them here. We had a situation, where when we were taking a business through a transition, and we suggested to them that their current accounting firm wasn't strong enough, and it was an accounting firm that had been within the family for 30, 40 years. And that was a challenge to have that. Finally, we got them to recognize that that current accounting firm was leaving a lot on the table. And they had to pay more for this new accounting firm, but they saved significant amount in potential taxes as a result of restructuring and working within that. So a lot of times the issue has to do with who's the team that you have around you. Business owners tend to put a team together based upon the growth of their business, and a lot of them are they were great to get you, but they're not necessarily great.
I think it's a great point here. I mean, I think this is the most important one, right? We deal with a similar thing where 0 to 1 million, 1 to 5, 5 to 10, 10 to 100 million. Each it takes a different type of skill set, different type of scaling. I mean, and as a business owner, I think business owners know that as they're running their business, right? Even with the team members that they're hiring. But it's interesting when they're the third party, either CPA or financial planner or whatever it might be, unless you're hiring the people who've already proven where you want to be, how are you ever going to get there? In other words, if you're actually even looking for, like when they show up maybe to AMI or even our firm, right? They go through it and they're like, hey, our business, like, you're here because something's missing. Otherwise, the team that brought you there you've already have solved it. And what's interesting is then, I think it's the emotional aspect, Ami, right? All of a sudden, their minds get open to what's possible. They get excited, but they also get a little nervous because, this is a new group. This is my biggest exit. This is multiple millions of dollars. This is family, a legacy. This is a new tax thing or whatever, new strategy, new team. And now this emotional aspect they go back to their old team to get, to get validation, right? But you can't blame the old team for saying, well, I don't know what they're doing, so I don't necessarily going to give you validation. So it becomes this kind of this loop. So Ami, what's the single best, piece of advice or wisdom that have helped them to shift and make that either that break and or bring in those groups in to make sure they're part of the team and they're not looking at it like a battle?
All progress starts with telling the truth. You have to be able to look yourself in the mirror. You got to be able to have a proper assessment of the people on the bus. A lot of times we talk about people, only talk about the people in the business, but we have to make sure that, and you got to take an honest view as, do you have the right legal, tax, banking, family office, wealth management? Do you have the best people for where you want to go, not where you are? And you mentioned it correctly. There's a psychological aspect and there's a loyalty aspect. We all love loyal clients, but the fact of the matter is, sometimes you have to make that hard decision. That's why you're the CEO. That's why you built the business. For it. But again, going back to identify and quantify, it's time. I'm working in the business. I'm not spending my time here. When we talk to business owners, exiting and transitioning is something they know, but it's not number one on their plate. Number one on their plate is, how am I growing and building the business, working in that. So it requires them to do that. But it's that all progress starts with telling the truth, really getting the clarity, being clear about, you evaluate your talent in your business all the time. You should evaluate your talent in terms of your outside advisors, in terms of, what can they do? What are their limitations? We had significant limitations working within Wall Street and banking that we don't have today, because most people in the financial service business are really asset gatherers and asset managers, and they throw all this other stuff around, family office, doing all kinds of estate and tax work, but they really can't do that. And and then there's a lot of tax people that are just comfortable doing the 1040, and they don't do tax planning work. And same thing on the legal side with it. So it's really about evaluating your team. And most people have a hard time with that because they're having separate siloed conversations with each member of this advisory team, and they haven't hired the group to be able to act as the quarterback or the chief financial officer around that. So it's really about, all progress starts telling the truth.
Thank you. That is so well said. And I think that's straight to the heart of the matter, right? All progress starts with telling the truth. And the truth, not only for what the talent is, but the truth of where you're at to even assess, are you in the right mindset to assess that talent? And I like the way you put that, to say, hey, look, you're assessing talent constantly within your own organization. Like, you've grown it to $50 million, $100 million. That's basically what you do all the time. You're casting vision, you're assessing talent, and you're leading your organization. Well, take that same mindset and scrutiny and move that to your team. And that can be tough because there's a loyalty part, right? And they have helped them with all of the things that they've done. And so they get caught in between. And then on top of that, they have never exited perhaps before, especially in a large way. So now there's another element of, well, if I mess this up, it could affect everything I've built. And so I think that's when the fear starts to start to pull in. And it's interesting because we'll be on, depending on how much time we have with clients, sometimes they're calling us with like 30 days to go or 15 days to go, or even sometimes, obviously, the longer we have with them, the easier it is to work through these things. But one of the first things I always say is, hey, look, bring in your team to these calls. So you're right. We're not in these silo conversations. We're all together in this, and not looking like we're all a team. It's kind of like the Roman legions with shields and a little spear, right? We each have our specialty. And we want to build a team, a dream team, if you will. And sometimes we're building alongside of your other ones, but if your other team, but sometimes if they're not involved in the beginning of the process, it can create these silos. And now it's kind of like one versus the other. So, I think that's so much wisdom there. Any last thoughts on any of this part of the conversation?
Yeah, I can tell you in talking with lots of business owners after the fact and doing it with that, haven't worked with us, there's another part of that, which is sometimes they're not understanding the conflict of interest within their own existing advisory group. For example, one gentleman that we talked to said, yeah, frankly, I didn't realize that I was 50% of the revenue of this accounting firm. So when it came time and I presented the idea that I wanted to exit, and that he kept dragging his feet and slow down, and it didn't dawn on me until we brought in some outside expertise that pointed that out to me. So, oh yeah, if I would have exited transition, I would have it would have been a significant revenue hit to my tax person.
Wow. So make sure I caught that. So let's say he's exiting a $50 million business, $10 million business, whatever, but he was providing so much revenue because of the relationship and all of that. It was 50% of that current accounting firm or whatever's revenue. So the person who was dragging the feet on the deal would happen to be that, let's say, that accounting firm. And because they were afraid once they sell it to the new buyer, they're going to lose all that business. Is that a fair summary, Ami?
That's fair, and it happens all the time. So there is this issue around. His comment was, I felt as I continued to go down the pathway, I felt like I really didn't have anyone that was really had my back, because everybody around the table, all my perceived experts in my team that I'd had for decades, all had their own conflict of interest around this transition and exit. And that also, by the way, happened within the family, because there were family members, who were living very well off of the business and were very concerned about, oh, wow, now I'm, going to get less, or how am I going to and be able to take that money and duplicate the kind of revenue that I was in. So there's a lot of behind the scenes work that goes on with that. And it's why we say your first step should be to go out there and find a company like ours. Sounds like maybe a company like yours, Brett, who can act as that personal CFO, the quarterback, the chief of staff, and do that first part, that identify and quantify and evaluate your people, evaluate the strategy, evaluate the execution around that. So that, because it's two separate things that are going. And I loved your point when you said this stuff takes time. You get the most effective outcomes the longer you have, certainly on the tax side, the longer you have to be able to implement what is still available, on tax mitigation strategies. The longer you have, the better outcomes you're going to have on an after-tax basis. So you really want to do this a lot sooner than you think. And then it goes back to, well, I'm busy running the business. What am I going to do? I'm, between my family, my business, my community, where's the time? And we like to say at Interchange, we're your time. We'll give you back time if you hire Interchange Capital.
Amazing. Ami Bomb. You can learn more about Ami Bomb by going to interchangecp.com. That's interchangecp.com. Rewind that. Everyone who's listening to that, rewind that right now, because I think that's such a huge golden nugget here of wisdom that he just said. And I love real stories like that, right? It felt like I really didn't have anyone who had his back, right? And it felt like there was all these conflict of interest, and it felt like there was more besides just selling and this big legacy and this big celebration it should be of success and huge amount of gain and a chance to do family legacy. But all of a sudden there's all these other internal battles, and not having a personal CFO or chief of staff or like a quarterback to help them exit in a way that's looking out for his best interest, right? And is not caught up in the conflict of interest that can naturally occur within family members or partners or vendors that all have a different stake in help you build the business, but also have their own thing. So it's absolutely crucial to plan and to be with someone like an Ami Bomb, interchangecp.com, to make sure that you are in good hands and that you're not looking back and having regrets. And maybe one of the questions you might want to ask, I'm going to go ask my CPA firm, right? Don't take it for granted that you might be their biggest revenue source, And if that's the case, or the largest percentage wise, those are some things to keep in mind. That being said, we're running out of time. Ami Baum, are you ready for the lightning round?
Sure.
All right.
Go for it.
Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget and make sure to tell yourself to do?
Don't worry. Everything will work out. Work hard. Keep in mind that you're here to help other people get what they want, and everything will be just fine.
Love that. Second question: what's the number one book you've recommended or given the most in the past year?
A number one book that I recommend always, forever, since I read it when I was 14 years old, is Think and Grow Rich by Napoleon Hill.
Excellent. Think and Grow Rich. Question number 3: what are you most curious about right now?
I am most curious right now. That's a great question. It's a lightning round. So I just have innate curiosity around the interchange between family, business, and ownership, and how to be able to help all those stakeholders. Because each one of those in the family, the business, the ownership have different goals and objectives. And I'm curious as to finding more efficient and effective ways to get better buy-in and better outcomes.
I'd love that. That's perfect. Second to last question. What's the number one thing in your business that if you accomplish this year, system, process, something, right, that would make the biggest impact for the rest of your year if you're able to do that in the next 90 days?
Well, I will get done in the next 90 days, and it's the book that I'm writing.
What's the book called?
I haven't come up with the title. I've got 27,000 words and a lot of chapters. But again, it's around that interchange of family, business, and ownership, and how to get effective within those three.
Fantastic. Absolutely love it. Last question, Ami. After all your success, helping all the people you've helped, being a certified financial planner, helping people exit in a way that gives them some flexibility, some freedom, and some clarity to help as many stakeholders as possible. How do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
I have 3 success strategies that keep me grounded. I meditate every morning. I make sure that I eat a plant-based diet so that I can keep my energy, and I finish my day with a yoga and a 5-minute headstand in the middle of the room. And if I do that every day, it keeps me going and excited. And besides which, I'm engaged with wonderful people and wonderful opportunities to be able to have an impact and help other people get what they want. So I'm 65 or 68, and I'm 3 years into my next 25-year plan.
Ami Baum, it's been more than a pleasure to get to know you. Thank you so much for sharing your timeless wisdom, your curiosity with us, and your mindset of helping people, making an impact in people's lives. I want to encourage you to keep using your gifts of being a planner and being someone who is a connector. I can already tell from everything we've talked about. For our listeners who want to get in touch with you one last time, what's the best place for them to find you?
Team at Interchange CP, Interchange Capital Partners, interchangecp.com. You send us an email, team at interchangecp.com, or as you've mentioned many times, go to our website, www.interchangecp.com, and you will have contact us. And we'd love the opportunity to give what we call our second opinion service on those 3 areas: family, business, and ownership.
Amazing. Thank you, Ami Baum. And I want to also thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust, or getting with Ami Baum to see what kind of strategies and solutions he has, is an amazing way for you to defer capital gains tax, build more wealth, and maybe unlock the freedoms you really desire in your exit of your business or highly appreciated assets. Please go to capitalgainstaxsolutions.com if we could be of any service to you, particularly for the Deferred Sales Trust. And also look for our new book that's being released on the 20th, just 7 days from now from where we're recording, called Building a Capital Gains Tax Exit Plan. And it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. We have the Kevin Harrington from Shark Tank in the book as well. And that one is going to be on Amazon. So check that out. Thank you so much for watching this, and we will talk to you again